Hey traders, what's happening? Jamie Sedley here. It is May 8th, 2019. And this is the graduate webinar with SB Trade Desk. All right. So before we start, assuming you saw my note from Sunday night's post, Michael's father unexpectedly passed away over the weekend. So that's why he has obviously not been on the site. And when I know more, or when he knows more about his schedule, we will let you know, and he'll be back, of course. But right now, he's got to deal with some pretty important, heavy stuff going on. So, yeah, he'll be back. But yeah, just whatever. Wanted to clarify that. So, all right. So moving on to the markets. Well, I guess we'll start with our dollar index stuff. Same old here, folks. We've got, at the moment, what appears to be, you guys can hear me, right? And I didn't ask that, I forgot to ask. Yes. All right, so starting first with the dollar index, again, same old here. We have pulled back from, this is US dollar, right? The FXCM one. So we have pulled back here, but we're now kind of into support. So really, we've been into support since May 1st, which would have been last Wednesday. And since then, a little up and down. And frankly, not a ton going on clarity-wise. So again, got to be open to both. I talked about the sentiment situation in terms of, what some of the articles I came across over the weekend, and we're seeing some of these opinions, I guess, on a stronger dollar, like the poll thing that we saw, right, from managers and the Reuters poll, excuse me. And I thought that was kind of a telling little tidbit, right? If I go back to that, so hold on, we'll go over here. All right. So the Reuters poll I thought was interesting, in that, where's the quote? So the expectations for dollar strength in the near term, and analysts and Reuters polls have been wrong-footed for nearly 2 years in their predictions for a weaker dollar, right? So a lot of people have been calling for a weaker dollar, again, for 2 years, as it says, right? And now this is to me, this is a sign of capitulation, right? Now they're all of a sudden thinking, like, well, shit, we've been wrong for 2 years, so now we're starting to break out, and now we're going to switch our tune. Now that, look, I'm not saying that's like the wrong way to think. You have to change your mind, but it's just when you see stuff like this where it's believed, right? That tells me that it is probably a little crowded or not the right idea. So I don't know. I have that in the back of my mind, and would kind of be ready to jump on. Well, am ready to jump on dollar short opportunities. We tried it with pound, obviously did not work. We're all the way back. Actually, I've completely retraced the move that we had Friday after NFPs, but we'll look at pound in a second. So I thought that was interesting. But of course, when we look at some of the data, so if I pull in a chart here of, say, seasonal several week period of dollar strength from a seasonal aspect. So we'll go here. Let's see. So here's DXY. Okay. You can see where we are here. So we're kind of in a seasonal strong point, and then May, like I said, May is historically one of the strongest periods of the year, one of the strongest months of the year for the dollar. Okay, so you have what I'm judging as the sentiment, which is a little more anecdotal, of course, right, than say something like this. But yeah, it's really a tug of two forces is kind of the best way to describe it, I think, at this point. Let's see here. All right, let's get back over here. Okay, so what does that mean for us? Well, off of resistance, big resistance, right? And kind of into support, 50-day average is a bit below. So, potentially maybe support's a little lower. But just kind of be aware of that we're wedged between these two levels. And frankly, I don't think, excuse me, I got a little frog in my throat. I don't think that you're going to have a super strong opportunity on the short side of the dollar, at least. First of all, there's no such thing really as an all clear, right? But I don't think you're going to have the best opportunity, the highest probability opportunity until we break probably below this trend line right here, right? Now, here's this is the daily chart, right? This is based on the channel off of the 2018 low, Jan and April. And we are back to this parallel, right? So it's really a tight range and highly uncertain at this point. And what did I just get an alert on? It might be discretionary. XLY, which is discretionary, is right here. What was that? Yep, okay, so just the old highs right here. All right. So that's US dollar, right? Again, no clarity here for me. Is this pullback and are we going for it again? Or is this resistance and we're going lower, right? Just no way to know. And competing pieces of evidence, most certainly from the sentiment in the seasonals, right? It's the best when everything lines up together. Now, DXY, which again is more euro, to me, this actually looks a little more bearish from the sense that this line here, which I probably should make the same color as it's this line here. Okay, here we go. I don't know why it's not changing. Anyway, so you got this line and this long parallel here, okay? We finally hit the 618 as well. Again, if I noted this last week in terms of the dollar, or notably the euro, right? And that we might be in that diagonal of a diagonal thing. In which case, if you look just from this low right here, right, the 95.74 low on March 20th, it doesn't look complete, right? It looks like a 1, 2, 3. This looks like a 4, and it's all overlapping, right? In which case, this would be a diagonal, and you want to get maybe one more push. Now, that's not necessarily something that has to happen, right? I'm not one of these people that's going to sit here and tell you that all the rules are 100% obeyed. Like typically diagonals, you're supposed to have three waves within each leg of the diagonal, but I'll tell you, I've seen it where there's 5. So I'm open to interpretation. And there should be another fork going that one. Okay, this is the fork from the low last year, okay? You see the 25 line? That's where we've been sitting here essentially since April started. A month ago we were here and we're still on this line. So again, very much like US dollar in the sense that I don't think we have anything super clear to work with. When do we have something super clear to work with? That's trying to break. I don't put a whole lot of stock in that one. But I would say that if you do break below the 97.20, let's just call it the low from last week, right? Last window, you break below that, that's the FOMC low. Break below that, break below the 50-day, then I think that we are working with something, okay? So that is the key in my opinion, right? Until that happens, it's going to be very much the same that we've been dealing with, which is complete uncertainty in my opinion, right? Things are always uncertain, but in the current situation, it seems to be even more so, simply because things are so quiet. You start to think too much. It's quite difficult to get a handle on where the move is, right? I always say volatility, emotion clarifies, and at this point, we just don't have much emotion in the market. There's not a lot to see. Okay, from a very, very, very micro standpoint, the last 2 days this week, we have had resistance at the old highs, but let's be honest, the ranges have been absolutely minuscule. So I don't know how much stock you want to put in that. We've seen it the last couple of weeks, especially, and this is actually true always, and that you have volatility tends to increase as the week goes on. The stats bear that out. The average range of of Monday and Tuesday, Wednesday and Thursday and Friday, they increase as you go. So the average range on Friday is historically the highest. The average range on Monday is historically the lowest. All right. Okay. All right. So now that I'm done with that little spiel, I actually want to switch gears, and instead of going right to euro and whatnot, we are actually going to take a look at metals, because maybe I think this is actually helping maybe to understand where the dollar is potentially headed. So we're seeing resistance. We did trade up to the highest today in gold last night, highest since April 16th. So not quite a 1 month high, more like a 3 week high. But look where we are, right on resistance. Okay. I think that there's a chance that you can get, say, 1255, 1256. Again, that would be 2 legs down. We've been talking about this for a while, and you do have the 200-day average there as well. And you've got the trend line off the lows. Okay, so this is really the big test, I think, for gold. And if we can get above here, then maybe there is something to work with on the long side of gold. But again, 50-day average is there as well. So stuck between a rock and a hard place here. My gut says, from a reward to risk standpoint, when I look at this, all right, this to me has more of a short setup to it, right? I mean, just real simple. Trend line, you've been in a downtrend, you hit resistance, why not look to go with it on the short side? So I am thinking gold is bearish right at this particular moment, okay? Silver level we've been thinking has been 1444. Now we have seen over the last couple of weeks where you've had this divergence, right? Go back in that gold chart. So A2, hold on here. Oh, where am I? We have had a non-confirmation where silver and gold have not been confirming highs and lows. Here is the daily chart. You can probably see the details far better if I'm going in and looking at this. This, by the way, is a shift fork. So this is not the channel. This is a shift fork. In other words, it's not the original, it's not the trend line, but you can see that more or less we are trading between the 25 and 75 lines of this fork. So it does offer a decent place have some context on what's going on. The test for this is going to be, I still think it's probably up here around 1506 for silver. And much like gold, until we can break up through something like, up through this level, I still think that the 1440s are going to be in play. So again, maybe we need to get silver and gold to resolve themselves before we can get the dollar to resolve itself. Does that mean dollar pokes to another high? Maybe. I'm not quite sure, but we will see. So the takeaway from these metals charts to me is that we are still kind of on the bear side for now, and still looking towards the levels that we've been looking for quite some time. Okay. Copper. Copper's retraced half of this move up. This huge drop on May 1st, last Wednesday, important in the sense that you try to break higher after a while, hitting old support provided resistance. I still think that this could be a very giant base, right? No doubt about that. And your key support is going to be, this is just the trend line all the way back to 2016, okay? And that is going to be more or less, just below the 618 of this run up. So you're at the 200-day average now. If we can turn up through here, get back up to this congestion area, maybe you have a low in place. But until that's proven, I'm much more likely to lean towards still thinking copper goes 4 to 618 and maybe the trend line down here. Okay. I want to see where we are on the weekly chart. Okay. Longer term, you can certainly see that the seeds kind of being sown for something bullish on the upside, right? In copper, in terms of you got a 20 crossing above the 50 on the weekly, 50 is above the 200, all that good stuff. So I do think that leaning towards the idea that this is a larger base, right? Rather than say we're going to completely fail, but that is simply my interpretation based on this evidence. All right. So we did that. We'll move to energy. I still really like crude here. I still think that we are looking at, so you've got, 1, 2, 3, 4, 5. Okay. Probably a A, B, C here. And then if you're going from the 51.23 low back on February 11th, you've got a clear 1, 2, a clear 3, with 3 being 1, 2, 3, 4, 5. And then you've got a clear ABC down. And then crude is basing. You can see here, this is a very solid little inverse head and shoulders look, right? And I'm looking higher in crude oil at this point. Noted you're probably going to get resistance up here, 64.75. It's still what I'm thinking. Looking up towards this area, 64.40, 64.70s, what have you, and that would be the near-term level. But ultimately, I do think we're looking at another high, right? And that's simply because we are looking for the fifth wave to extend to the upside. So near-term trading basis, look higher in crude. Right now, you're saying, Jamie, you are talking about metals going lower possibly, and crude looks bullish, which it does. I would say crude looks more bullish than the metals look bearish, but that doesn't say much about the dollar. Keep in mind, the dollar and crude have been moving together for a while, right? There has not been much of the relationship historically, right, where you see, a weaker dollar and therefore strong energy or strong crude, and vice versa. That just hasn't been the case for quite some time. So don't let that creep into your thoughts too much here. Okay. All right. Natural gas is getting going as well. All right, we'll move on to FX now. Okay, so I'm just going to pull up daily charts. You can see here tiny little ranges, except for the pound, of course, which is the one thing that we were actually long. I do think that you've got a great opportunity at the 2965, 2970 area for a long cable setup again. And this was the chart I was referencing when I was talking about DXY and the diagonal of the diagonal type of thing, right? So, you know, all this action, let's just hone in on this part, right? From the September high of last year, you got 5 down, a rally, 5 down, a rally. All of this is overlapping, right? You've got 1, 2, 3, 4. Are we going to go for that 5th wave? Are we going to go for one more, right? That's the question. Are we going to go for that one more drop and get to that 110.40, 110.50 area where there is so much support sitting? You know, again, you've got, if I were to do a measurement, this proposed wave A, right, and proposed wave C equals 0.618 of this proposed wave A down at 110.40, okay? 110.40. You've also got, of course, the trend line that goes off of all the lows from November of 2017. So 2017, 2018 August, right? 2018 November. That comes in right here too. You've even got the really short-term level off of the lows from April and late April. So April 1, April 26. That's going to come in over here as well. You know, I still think we have to respect that. I was hoping that last Friday on NFPs, maybe we could get it out of the way and just spike down there. But again, vol is just is nothing that it's really, I guess it's asking way too much. But yeah, this is still a thought that has to be front and center. Going to short term. So here's a 4-hour chart. Still looking, you know, just the channel from the April 26 low and 5.3 low. If you do that, you can see that the center line has been resistance and more or less support on the 25 line. It's not great. I would say you get above the 112.20 area, maybe there's something there, but again, even that wouldn't do much. You'd still be looking at resistance up around 112.50 anyway. But at least we kind of have an idea of where maybe to look a little bit. The cable chart is the one that I was referencing that I liked so much. You know, we had a high volume breakout on the British pound over here, and I thought we'd come back, try to hold that 130.80, 131.10 and go. We did initially, right? We got 130.80, went up, and we failed again at 130.130. Probably bad trade management on my part in hindsight. But there was a lot there to suggest that we could move to the upside. You're back on this parallel here, so I'd hate to say it, but this could be support and go higher. But I do think the much better, cleaner level is going to be basically 129.65. Excuse me. Trend line off of the lows, right? Top of the wedge line, right, which was support over here on NFPs. And if we go to that daily, that simple daily chart, of course, you've also got the 200-day average there as well, right? All these lows, all that. So there is a great level to look at in terms of another attempt long at 29.65. And I would just focus your attention on that level the rest of this week. Dollar yen is interesting. Really kind of annoyed with this. You know, I've had this bearish view on dollar yen for a while now, and we've been stopped out of it twice on April 24th and April 29th. And unfortunately, the second one, excuse me, we were stopped out right at break even, which was right here. The high was literally our stop, which was break even, which was 111.90. And then, of course, we've gone straight down. So a total pain in the ass. I get it. Has not been the easiest. of times over here at SB Trade Desk in terms of trading. But I think we've got great levels to work with. Okay, like I said, for the last couple of days, last week, 70 is a spot. Okay, I do find it instructive and interesting that we are actually consolidating here at the median line. I am hoping that we do get a little more of a bump higher and get up into the resistance up here, right? This 110.80 region, 110.76 is a square root level. That 110.80 is going to be a spot. We've got really solid parallels to work with here. This is where we want to be looking on the short side. If there's a surprise move to the upside that's a little higher than expected, first of all, I do think this would be decent resistance anyway. But you know, if we want to get cute with it and maybe say this is 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 5 waves down. If you've got a 5-wave move to the downside right here, and you're going to go for maybe a bigger correction, first of all, the 38.2 is 110.85 anyway. That could be good enough. But ultimately, 111.45 is also 618, okay? And that's also going to monthly opening price. So, you know, if we can hold up here through the end of the day, I actually, from a very short-term perspective, I actually think you could have a long scalp on dollar yen up here, especially since we've kind of come and held the median line, right? As I mentioned last night's piece, median line acceleration is a thing, but in this case, we haven't accelerated through it. So again, remember, median line acceleration, you trade down through the median line, come back, and then test it as resistance, okay? From here, I would think that you get something of a bounce, just not sure how high it goes, but the first level is going to be the 110.80 area. That brings me to something I've been working on. You know, when we get these terribly quiet, awful trading environments, it's good to kind of do some research and work on some tools. And something I've been working on with the volume stuff, obviously this is through futures, right? Not through FX, because I don't have the really volume that you can see for FX, right? Because it's not a centralized market, it's an over-the-counter market. So looking at futures, where we can aggregate all the volume and see what's going on. But this is I'm looking at creating 2 different types of indicators here, right? And it's not a signal. You have to have your levels in place beforehand. But what we're looking at, I want to see, so if I take, let's see, get rid of that one. So these are possible reversal levels, okay? And what I want to see is I want to see a move into, say, a 5-day high or a 5-day low on high volume. And then I want to see the next bar in the opposite direction on high volume as well. And I'm defining high volume as simply, you know, 20% above the 20-hour average, okay? So we can look at it on a daily basis as well. Get rid of this. This is the breakout level. Okay, so here you go. So you can kind of see it here, right? Now we're looking at it on a daily basis rather than hourly, which I think is far better anyway. And you can see that you get a drop here, right, on high volume. This was on 10/3/2018. Okay, the volume ratio is 1.29, meaning you are 29% above the 20-day average volume. And the next day is an up day, and you have 1.56 is the volume ratio. So more volume on the upside. Okay, that was the low. Back on 1/3, this was the flash crash day, of course, right? We had the opposite signal, right? Sell signal, top signal. The next signal we had was on 4/25 is a buy signal. And this is for Japanese yen. So this would be, again, short dollar yen, long yen. So this is something that I think could be quite useful moving forward. You know, if we want to look and see, like, for example, Kiwi dollar could be an interesting one because Kiwi dollar I here is already high. It's already 1.34 today, obviously after last night's RB and Z. So what I will be looking for is potentially if we finish the day down, which we might not even do because we're close to unchanged, but if you finish the day down and then get an update tomorrow on high volume, you're going to have a high volume reversal day, right? Do they all work? Of course not, but you can get some pretty good signals here, and you wouldn't be looking to do it all the time anyway. You'd be looking to use it at certain points. Kiwi right now is a place where you definitely would be looking to use this signal, right? If we go back to our Kiwi chart real quick, I mean, this is a beauty. Look at that thing last night. I mean, this nailed it, right? Unfortunately, we weren't short into it. That was the plan for a while. Remember, we have these orders sitting at 67 to 67.19 or so. Paolo saying, can you take a look at Kiwi Yen? I absolutely will, my friend. Give me just a sec. But yeah, this is a beauty. This is where you'd be looking to use that high reversal evidence. And I think we actually got one on an hourly basis here. Mahai, how are you? I said if you did not already, please take a look at S&P and DAX. I absolutely will. I'll write that down right now. So let me write this down, QEN and S&P and DAX. Okay. All right. Hold on here. All right, there we go. All right, so yes. So anyway, this is something that I'm tinkering with and kind of working on during the quiet periods, trying to develop some new tools and whatnot. But yeah, I think it shows some good promise. So I'll keep you updated on that stuff. All right, let's go back to our charts as Jamie's ADD is kicking in, and I am all over the place, aren't I? Okay. All right, so went through pound, great level here, 29.60s. Euro, kind of dead as a doornail. Dollar yen looking for a bounce, probably up to 1080s to start, and then we'll see. Kiwi, as I just mentioned, could be a huge low. We could have just made a gigantic low, right? That's all there is to it. Want to see some evidence, of course, that we are coming off the lows. At this point, nothing's happened since last night. Spiked down after RB and Z and it's gone flat. Aussie, again, still here, totally dead today. Now, I want to stress the thing with Aussie here, the near-term levels. What was that? Looks like there was just like a handle drop in the S&P or the NASDAQ. I'm guessing Trump's on Twitter again. Let's see. I don't know. Okay, so Aussie, the two levels that we've got here. Someone from the White House said China wants a deal, of course. It's so silly. All right. The Aussie levels, all I can see here at this point is your 70, call it 70, 90, 71, 10, and 69, 13. So, 190, 200 pip range to work with there. But I also do think that the potential for a much greater low to form in Aussie is right here. Okay, now maybe we already have it. I don't know. We could, because look, in last night's article or last night's swing update, I did note the potential for us to get this divergence again, but in the opposition with Kiwi and Aussie in the non-confirmation, right? Where we just got a we have had where Aussie's been on the lows and Kiwi hasn't confirmed it. Well, last night we got Kiwi on the lows and Aussie not confirming it. So all this dislocation with the markets, again, tells me that we're at like, risk of reversals, right? And this is a chart from Sunday, I believe, that was either Sunday or Monday, not sure, but this is important. So this is the weekly chart, okay, of the Australian dollar, and this is the DeMark buy countdown on a weekly basis. You get weekly DeMarks at like the biggest turns ever, and we got one here, um, I guess last week, right? Well, as I said, this is the fourth time we've ever gotten one. So you had one here the week that ended July 5th, July of 2015, 24th of 2015. You did turn up for 2 weeks, and then we went for our final drop, okay? So this one you could say was early, but you did turn up for 2 weeks ahead or after the signal. The other ones that we've had in history, there's only four, okay? The other one was right here. The last week of 2001, you turned up, came back, tested the low, and then went on a gigantic run. And the other one was here, March of 1990. You turned up, came back, tested the low, and then went for a big run. So that type of longer term look to me says that you should kind of be on the lookout for maybe something on the upside in the Australian dollar, right? And sentiment's pretty bad there. So, that's where my longer term head is at. Now, again, we're going to want to see some evidence that we've actually made a low. We could have done it, right? We could be trying to form something of a base here. Okay, you can see that you did get volume reversal evidence over here, big reversal up day or up hour, excuse me, over here, and we're holding a high volume level here. So this could be in play. All right, now let's look at a couple of indices real quick. I actually think that maybe one of the more important ones could be the Russell. So this is the Russell 2000, E-mini Russell 2000, and spiking up through, pretty big resistance here. This was last week on Friday, right? Reverse Monday, Tuesday down, and we're down today. This is a lot like the dollar index from a technical standpoint in that we've been going higher, right, in the near term, and the question is this a pullback? Do we resolve higher, or is this a failed breakout? And do we go low? The real signal for this is going to be the 1556.70 low down here on April 22nd. Okay, you get below there, you're below the 50-day average, and you could be looking for a much larger drop. Also, the 200-day average. But really, my focus, as we all know, has been on the NASDAQ. And these levels are an absolute beauty. So turn down here, we're trading within these parallels just beautifully. The median line up here is going to be like 77.38 at this point. That's going to be the lows over here. So if you're trading NAS futures, 77.38 is your resistance, and your support is the almighty 75.44 3/4. And those two levels I would mark on your charts, and those are levels that I'm looking to trade on a near-term basis in the NASDAQ. Again, as noted with the Qs last night, the equivalent levels are going to be these. We might have just done it. This was the chart, your 10-minute chart, and there you go. And we might have just done wave 4, right? So what we say, wave 4 is going to be 87.15. We just went 87.20 or something like that, 87.17. Not bad. I'd be looking for one more low down here. I don't know if you get the 82.80s. That is the beautiful level to look for, but the trend line is going to be a couple ticks above that. But, what's 10 ticks between friends? And this is the rest of the day. I think we are going for this 87.15. I think we're going lower. I think we're going here, and then you could look for a bigger bounce. Okay. Now, when I look at, here's the scary chart for you if you're a longer term kind of bear. This is the cues on a weekly basis, and look at our channeling techniques that we use, right? When we go off the lows from 2002 to 2008, that's your here, that channel line. Once you went through it, this was the slingshot trade that we talk about, right? You went up, and where'd you stop? We stopped at the half extension. So distance between the median line and the upper parallel, extend that. That was resistance. The next run here, after the election, Trump elected, we went on the next run. Where have we stopped? The full extension, right? Not just that we stopped there last year, we've stopped there this year. So, and then here's your traditional fork, if you will, right? That was also resistance up here. Do we go for one more up here? Go to 203 in the NASDAQ and get really silly? Or was that it? I don't know. We will have, but on a longer term basis, you have to say that this is some crazy high risk area that you're at. So when I see something like this on this 10-minute chart right here, and maybe going 5 down, the question is, was this 1, 2, 3, is this all 4, or was this little 4 and this little stubby 5 up here with the truncation, which is a possibility that you have to consider, okay? But near term trading wise, don't worry too much about that. Just look at the 180, 280, 183 area for support, for a bounce, and then we'll see what this is what I was talking about last night. Then we'll see what the rally looks like. If you get a rally in 3 waves back up to here, it'll be worth taking a shot for some resistance up here at 189.90, 190, something like that, okay? If you eventually go up here, turn down and break this channel, then we'll have a better idea that we've actually done something really important, like reverse for something significant. So that's my spiel on the NASDAQ. That's what I'm focused on. Let me get to the questions that we had. We had S&P, DAX, and Kiwi Yen. So if I go to the S&P, I'm going to look at real quick the S&P futures because that's what I have drawn up here. Go to 240. Okay, 240 minute. Excuse me, we are at a massive, massive level. So this is the channel that we've been following. We're on that line. We're on the 200 average on the 4-hour chart, which you can see tends to be pretty good in terms of support on the way up, even resistance on the way down at times, and support on the way up. So we are at a massive decision point here. Near-term wave structure, not especially clean, I don't think, like all overlapping. It could be a series of 1s and 2s, not really sure. But if we go back and look at a much more, just a clear kind of daily chart here, I think that you can agree that we're at a massive point. So let's go to cash real fast. Hold on. All right, here's SPY. This is my volume reversal indicator on the daily S&P chart. Look at the sell signals it gave here on 5/1 and here on 9/21. Not bad. Yes, you're going to get some false ones. You're also going to get some pretty good ones. Okay. But if we just make it real simple and look across this chart, I mean, how big is this? Here, 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 big breakdown. This is like the realization that something is terribly wrong. Here, consolidation, up move, and here we are again. So, we can look all we want at the near term stuff, and I do think that NASDAQ chart especially that QQQ 10-minute chart is like really clean. Like you're going for one more, we just hit resistance, go for one more little fifth wave down. And then to me, the reward to risk trade at that point would be to look to, put on a big bearish position on a bounce. But just the simple levels analysis here, I mean, this is as important as it gets in my opinion. So really clean with where we are on this S&P chart, okay? If we go for one more tag here, and I do think the action, if we get down here, will be telling in the near term. If you get down, what's that high there? 285.18. So you get to that 285 level, and then you kind of recover a little bit. I think that tells you that you've got, you're in line, 5-wave down move, and then a bounce. So yeah, pretty key. Kind of makes sense if you think of dollar yen as well. Right, with its 5-wave down move, and maybe looking for a bounce back up here. All right, so there's that. DAX, you want a DAX and Kiwi yen, and then I do have to get going, although I will take another couple questions if there are any. Let's see here. I did not have it on there, did I? Hold on. I think it's over here. All right. So if we look at the DAX, it's just a little trend line up here. All right. Kind of a false breakout look over here. And let's zoom in a little bit. I mean, how kind of annoying is this, right? You see something like this with the DAX and see the move we've had off the lows, like since the very end of last year. This is what I was thinking with the euro, right? Euro hasn't done a damn thing. All right, so if we look at just the channel stuff, you've got something pretty good here. I wouldn't even keep those on there. 1, 2, 3, 4, 6, 7, 8, 9. Probably more like 1, 2, 3, 4, 5, 6, 7. All right, hold on here. And not the cleanest relationship in terms of equality of legs, but you do have a great channel to work with. So, Mahai, I think it was you that asked about the DAX. So if we're looking here at the DAX chart, follow the channel, okay? Kind of that simple. And you see where we are on this channel line? Support median line, support median line. Literally just about now hitting resistance. Could be a little higher. You get another push the rest of the day. But from a short-term trading perspective, I'd be looking to put something on right here in the 12-230. This is again the CFD, the German 30 as they call it over there at FXCM. But this is a level I'd be looking at for resistance, more or less just above where we are right now. Longer term, tough, right? I think that I did have something here on a longer term DAX chart, if I can find it. DAX. DAX. We'll just do this. Hold on. All right, so I do want to look at the German actual exchange of it, right, rather than looking at the CFD. So we're going to go really long term here and get some levels or some ideas. So we're going to start here. All right. And I'm going to go here. All right. So if you look at the channel all the way from the 2003 low, it's pretty clean. I mean, we hit support, right? 25 line, 25 line, 25 line, 75 line. But this is such a long-term chart that I think you probably also want some other reference points. So here we go. I'll go to a daily now. And this highlights how important it is. Okay, right down here, 11,000, about to say about 11,880, which is going to be old lows. That's a spot. Okay, so this is longer term kind of context stuff. You know, no one knows where it's going, but I would say that if we got all the way back up here, you could try to double top, right? Because that would be the underside of the line all the way back to the 2009 low, and it would be the center line of the channel from the 2003 low. Okay, so this is maybe something a little longer term to think about, but it's good to have it in the back, you know, the back of your pocket, that you could go for a big double top. Okay, it's just something to know. Near term, of course, focus on that channel. That's really the best that I can do. Resistance up here, support down here, right? If you start to establish back above the center line, especially if you get back above the trend line from the highs from last year, then you can think, you know, maybe a blowout long position. But the levels are pretty good in terms of the channeling. Let's go to the New Zealand dollar Japanese yen, because we had that as a question. You can see Aussie yen here, pretty good, right? We had that resistance over here after RBA. I could not stay awake for RBA the other night because I do need to sleep. I wish I could stay awake for 24 hours, but it's probably not very good for your health. But we did have a good chart there. That was a pretty good look in terms of getting resistance up near that level. Going to the New Zealand dollar Japanese yen. So here's the day, or for this is the level. We actually got to the level we were looking for. Okay, hold on. All right. Let me just clear some of this up. I've had the right ideas, just the execution. My execution's been terrible. Like we had this look, shorting Kiwi yen. Remember, we were looking to short up here in the 72.70s area. We just never got it, right? We got to, 74.60, just missed it. But from here, look, you're at a very important spot right now on Kiwi yen. I would not be surprised to see us bounce some here. Look at all the lows back here from last year, okay? Look at all those lows. I'm not sure how much this fork really matters, this really, really steep one, but I'm going to keep it here as long as we are trading within it. Don't need all of that. This is probably the more important one. So I know this Paolo that asked about Kiwi yen. So Paolo, so here's Kiwi yen. So this is a channeling technique, okay? You can see what we're doing here is we're drawing this channel right here, okay? This is the channel, and this is literally just, it's the same exact tool or thing I did with the NASDAQ, all right? In that you have the channel, and then you extend half of the width of the channel, and then you extend the full width of the channel. So half the width of the channel, you're kind of at it, well, you not kind of, you are at it right now. So you're here, and you've got all the support down here, okay? The full width of the channel, if you do go a little bit lower, is going to be right down here at 71.70. Now, I want to also see where the daily reversal support is, and holy smokes, it was hit today. So this is another thing that we do trade us. We talk about what we call daily reversal resistance and weekly reversal resistance. All that means when you hear it, it means the low day and the close of that day, or the high day and the close of that day. In this case, the flash crash low was obviously the low day. So, you know, this, in my opinion, this is big support. This is a big spot right here, okay? I would be looking for, you know, a decent bounce here. Now, I will say too, what you're going to have here is you're going to have, you can see the importance of this level right here. Let's do this. You're going to have, see this lower parallel line, which is in magenta now. See how that was support? And then you see how we gapped through it this week. You get back to that, that's going to be your first resistance area, okay? That's going to be 73.40. So you hit support last night. I'm not saying it's a long setup here, but I am saying it's support. I'm saying it's 73.40 resistance. It would make sense to get a little higher off of that. You know, Kiwi is into the gigantic level that we've been talking about, and dollar yen's got 5 waves down. I had a longer term Kiwi yen chart in here as well. This is the longer term Kiwi yen chart. So this is like the real, yes, we are at support. This is the scary bearish end of the world chart. This is a longer term channel now. We're going to channel all the way back to 2014. And you can see support, right? Support right here. Support, support. It's a big level. So how do you use this to trade, or how do I use this to trade? So I like to try to catch on to a trend at some point, right? That's the idea. I'm using this, so I'd be looking at, we're going to get rid of this garbage over here. Crap, I deleted that chart. Why did I do that? Hold on. What I would look to do, Paolo, is we look for this. This is called our slingshot setup. So you have your channel, right? Your channel, former support. This is resistance now, 73.10 to 73.30 or 73.40. This is the area that you'd look to short into, okay? See if you can catch a crazy move to the downside. So I want to know where the levels are, and this is support. I don't want to be selling into support. That's not a good idea. What I do want to do is recognize the trend, have that longer term chart on hand to recognize that you can go a lot lower. I think that if you do, most of it's going to be Japanese yen. I'd rather probably trade dollar yen at this point anyway, but based on just the price behavior and the channels here, this is resistance at 73.10, 73.40, okay? All right. All right, that's it for me today. Again, keep, you know, Mike in your prayers and everything with what's happened there. But I'm going to get this archived for you as soon as possible. Have a great rest of your week, and I'll talk to you guys later. All right, take care.